Joining me right now. He's the Chief Executive Officer at Cowrie Asset Management. Mr. Chukwu, good morning and welcome to the show.
Good morning, Chief Nancy. Thank you for having me.
Welcome, Chief Chukwu. You're also a chief, you know. All right, let's get started.
You remember the debate we had when I said you're a high chief and I lost money? But next, we are promoting you to high chief.
No, I'm not a high chief. I'm not one. I know I'm a chief, but not high. I just know one high chief, who is the founder of that Communications PLC. That's the high chief that I know. I think I'm okay with the chief that I am right now. That is, if I have embraced it yet, I'm trying to embrace that. But let's get started, and let's start from the marketplace, the analysis I just had earlier on. We've seen that the market, so to speak, at least this year, hasn't done badly, especially where we started from. I know we were like the best performing market in 2020, despite 2020 being a pandemic year. But what I mean that we haven't really done badly, especially from where we were in 2021, because we saw a lot of negatives in 2021 in terms of market returns. But now it's around 7%. What do you think triggered that? How did we just turn bullish? Was it a sudden turn?
My take is that the bullish run we saw in the past couple of weeks, we are driven by policies as it relates to some of the quoted companies. Take, for instance, the banking industry. We saw a situation where investors went on a buying spree for First Bank, principally because there is a struggle for ownership or person who is going to be the major shareholder in First Bank. So that market rally saw in First Bank also had a trickle-down effect on other operators in that sector. Secondly, we've seen that changes in policy as it relates to the stoppage of FSLs to the BDCs now meant that the banks we are now getting the benefit of foreign exchange more than they used to get. So if you look at the performance of the banks in the third quarter of this year, you realize that many of them are reporting higher returns from from commissions and fees, particularly FX-related commissions and fees. And that is boosting their earnings, which investors are obviously have noticed and are going for banking stocks. So the banking industry has been helped, one, by a bid to take over ownership of a particular bank, and two, most importantly, by the change in policy that now gave the banks additional opportunities of making income from FX transactions. So then if you go further, you look at the sector that actually should be the largest sector, largest share, has its largest share in the market, that's the telecommunications sector. You observe that the changes in the policies of the central bank that gave payment service bank licenses to MTN and Airtel, both companies being quoted, propelled a lot of rallies in their stocks, meant that people recognize that these licenses will bestow on them additional revenue earning capacity. So people began to scramble for their shares, which saw a rally in their shares. And we know the way it works out. If you have major market leaders in the industry having good performance, you ultimately see others, it will leave the boat of others. But then the bear run we saw in the last few days were largely because people have seen huge profits in their portfolio. Don't look at the 7.227% year-to-date gain. You have to look at what was the gain between the time when the market was still negative and what it is now. So you realize that within a short period of time, people have made so much profit from their portfolio and they are beginning to lock in to take those profits. And that's the reason why you saw the dampening in the market, profitability on the market, sort of turning back to negative in terms of market index. But I think that's a temporary thing because those underlying factors I mentioned are still there and will further propel market growth. The benefit that the banks are going to continue to enjoy from the fact that all FX transactions are going through them will continue to boost their revenue, which will mean more people will come into the banking stocks. The benefits associated with payment service banks that the telco companies have gotten will certainly manifest in higher revenues. So after people have taken some profit, you're going to see people come back when a market has moderated and come back and bid up the price. So the bear run we've seen the past few days will be, for me, short-lived because the potentials for quoted companies, particularly these sectors I've mentioned, to make good money has been enhanced by those policies.
I like that you mentioned the PSB licenses that have been given to MTN and Airtel Nigeria, because I also noticed that, and you just took the cat out of the bag, because that was my next question, but you've given me the impact so far that investors are locking into those stocks because they see some kind of their revenues will be increased as a result of these licenses that have been generated. But let me ask you this question, especially around the MTN and Airtel. Do you see now that the Central Bank of Nigeria, the Apex Bank, has come back to basics? Because I remember years ago, even when Sanusi was there as the Central Bank governor, there were talks about, should we have a tech model, a tech-driven model, or a bank-driven model? So do you think now that the chicken has come home to roost to say, guys, those tech guys, let them just take it over? Just like we saw with M-Pesa in Kenya with Safaricom.
You know what has happened? Between the time Sanusi was the central bank governor and today, it's a completely different world. The level of advancement in fintech technology has made it imperative that the central bank had to license the telcos as payment service banks. Previously, the issue was, would the telcos not cannibalize or outcompete the banks whose primary duty was that of intermediation? Would the telcos, if they have the telecom, given the pervasiveness of their network, would they not use it and effectively take part of what used to be the banking services from the banks? And that was the argument that delayed or prevented central bank then from licensing the telcos as payment service bank. But as it stands today, if you don't license the telco, there are a lot of fintech companies are riding on the backbone of the telco to provide some of similar services. So in as much as that is already going on, so why not license the telcos to bring down the cost and make the service available to the people in the rural areas, and give them to provide the last mile delivery, which they already have the facilities to do, instead of relying on third parties who are going to latch on to the backbone of the telcos. So I think, given the advancement in technology we've seen in terms of particularly fintech, financial technology, it became imperative, it became overwhelmingly reasonable that the central bank had to recognize that you can't keep away the telcos because their backbones were already the support base for Renaissance services.
Where does it keep competition? The PSB licenses given to the giant telecommunication companies and the fintech companies, so to speak. What do you see in the mid to long term?
Okay, in the mid to long term, we are going to see even the financial institutions, banks, transform to largely some form of the IT support institutions, or they're going to ride largely on the backbone of IT. You see, the world is evolving at a very fast rate, faster than anybody could have imagined. So you're going to see competition largely be driven by telecommunication capabilities, and that's why now they say data is life. And previously, in Western countries, data is considered as one of the critical basic infrastructure the government has to supply, or the government has to encourage the private sector to supply. If you go to a place like UK, virtually all the malls, all the public parks have data services, because you just cannot operate in today's world without data services. So you're going to see a situation whereby there will be a mutation in the structure and the nature of banking services, and it will be largely IT-driven, which we're already witnessing. Today, Nancy, you don't need to go to the banking hall to make withdrawal. I can't remember the last time I entered the banking hall. You don't even need to pay your tithes in your church or pay your offering by issuing a check. The churches are now broadcasting their accounts, so just need and doing an online payment. Today, the central bank has introduced e-naira. You don't even need to have a bank account as the e-naira deployment advance to have a portfolio, your wallet. So, and all this is riding on information technology. They are riding on financial technology. So the banks are also going to mutate to become service providers, financial service providers that are going to ride on technology, no longer the brick and mortar structure that we have today. A lot of businesses are going virtual, and banking services are going to go virtual. So I see competition in the future be it about your ability to provide service in a virtual space. Even in our own country, in our own company, Cowley, one of the things I told my people, look, we are digitizing everything. You're going to get to a point. In fact, today, Nancy, you don't even need to come call my broker to trade for you. With our app, you can actually do your trading and have your transactions settled on your platform or your handheld device. You don't need to call a broker. So that's where we're going to, and it's going to be the next phase of competition. If you look at the global corporate space today, the major leaders, the largest institutions in the world today, the richest institutions are basically largely IT driven. The era of the Ford Motors have passed. I don't know whether you saw an advert, a news clip that said an EV company, that is electric vehicle company that was just a startup, has a market capitalization bigger than Ford Motors. That's where we're going to, and that's what competition will be in the near, medium to long term.
Okay, I know we have a lot of issues to discuss, but let's quickly talk about the financial inclusion component of all of this, which you have mentioned. The financial inclusion component, we've seen now the telecommunication giants being granted licenses. That hopefully would increase financial inclusion. But the financial inclusion, isn't it just biased to perhaps banking services and not the broader financial services? I know you talked about stocks earlier, that I can trade my stocks online. How about insurance, about pensions, about all of that? Is it just financial inclusion around the banking space, sending money, save money, and all of that? I know you know what I'm talking about. And there's the financial inclusion drive of the CBN for 2025, I think. Now it's been shifted to 2025. So how do you see all that playing out?
You know, when we talk of financial inclusion, like correctly pointed out, it's not just banking service inclusiveness. It has to do with all financial products. Today, there is what we call micro insurance. There is also micro pension scheme, which has been promoted, is being promoted by the pension fund administrators and pension commission. So, and it's allowing those who do not even have formal employment, who are artisans, who are traders, to have their retirement savings account with the pension fund administrators. So it's no longer, it's now focused on the informal sectors, so that, and it's riding purely, exclusively on technology, because an artisan who saves maybe 15 naira a day will not transport himself and pay 200 naira to go to the office of a PFA to go and deposit 15 naira. So you give them ability, facilities, capabilities to be able to make their online transfers with their phones. They are making those daily contributions or monthly contributions virtually without necessarily coming to your office. So the same thing is applying in the insurance industry. There's also microinsurance that's allowing retail insurers, retail people to go and take on life policies, endowment policies, and even their motor policies, their vehicle, their Okada policies.
Mr. Chukwu, Mr. Chukwu, hold on.
You can actually cover your bicycle.
Mr. Chukwu, hold on.
I understand. Microwave oven.
Yes, Mr. Chukwu, hold on. I know all that. There's even Takafu, microinsurance and all of that. What I'm asking specifically is that the pace at which banking inclusion or banking inclusiveness is going, are we seeing other financial services going at that pace? Some people may not even know there's microinsurance, micro pensions. What else do you have? All of that. So I'm actually asking, are we going to see full financial inclusion, if there's anything like that, around other spheres within the financial services at the pace by which the banking inclusion is going on?
Okay, what we are witnessing is today the banking industry is actually the dominant player in that sector, in terms of market capitalization, in terms of market penetration, in terms of inclusive use of their services. In terms of capitalization, they are followed only by the PFS, pension fund industry. But as it stands today, the banking industry may lead the drive for financial inclusion. Excuse me. But other financial services will follow suit. We're already seeing banking services being bundled with insurance services in what they call back assurance. So it simply means those who are selling banking services will also sell insurance products to end users. And the retail investors, retail customers can also buy not just banking services, but also insurance services.
Okay, let's leave the markets for a while and move over to the Apex Bank. The CBN's last MPC meeting will hold Monday, Tuesday. We expect decisions tomorrow. That's on Tuesday. What do you expect to see? Any drama, any surprise, any gbas-gbos? Dovishness, will it continue? What do you expect to see, and what questions? Let's say you are there in the hall tomorrow. Talk to me about the questions that you'll be asking Emefiele. I've asked you different questions, like 3 now. So let's get started.
Okay, the first question I'm asking is, we've seen the policies are beginning to have positive impact. We've seen economic grow about at 4.03% in the third quarter of this year. We've seen a consistent moderation in insurance inflation from 18.17% to 15.99%. But we know that the GDP growth rate is also slowing because the base effect we had in the second quarter is no longer the same magnitude we had in the third quarter. So the economy, if you take out the base effect, is not yet growing at the rate Nigeria is expected to grow. What changes in policy with the Monetary Policy Committee adopt that will ensure, one, we maintain the current trajectory in the inflation rate, but we also see a further growth in GDP growth rate? So that would be my question to him.
No, Mr. Chukwu, I don't understand. Sorry, I lost you there. Was that a question or your comments?
That's good. No, that's the question. The question is, what would they now need to do differently?
Okay.
The policies as they stand today is such that we've seen moderation inflation rates, but the growth rate of the GDP, though at 4.03%, if you take out the base effect or the fact that GDP only grew, contracted by 3.62% in the third quarter of last year, you realize that the growth rate, if you take out the base effect, is still below the population growth rate. So, given that the growth in the economy is quite slow, what changes in policy beyond the intervention development finance initiative the central bank has done, are they going to do? What other tools do they have to deploy to ensure that the growth rate of the economy is faster than the current rate?
Okay. I think I get that. Mr. Chukwu, should I just give you a 30 seconds break for you to take a cup of water? Should we do that?
Okay, great.
Okay. Let's quickly take a break, and when we come back, Johnson Chukwu would join me again, and we'll continue our discussion. Please just don't go anywhere. Don't touch that dial. Don't touch that remote. What you need to do now is to use your phone and, go on all social media platforms. Join us there on Facebook, on Instagram, on YouTube, on LinkedIn. What else again? There's no Twitter yet. Come on, FG. Come on, FG. Let's quickly take a break. We'll be right back. All right, welcome back to the program. Johnson Chukwu, the Chief Executive at Carrier Asset Management, is still with me. Mr. Chukwu, are you okay now?
Yes, I'm absolutely okay. Thank you for that break.
Okay, you're welcome. Now, if we take a look, you've spoken to me about the question you would like to ask the CBN governor tomorrow. I've taken it down, and I hope to ask that question or put it in the pile of questions for them to answer, because this is the last meeting for the year, and this meeting will be quite significant and important. But I know that the CBN's MPC cannot go into tomorrow's meeting without thinking of the weakness of the naira since this year started. In the last 2 MPCs, the central bank governor has been quite, vehement around FX speculators and all of that. Called one company's name that I don't want to call right here on the show. The July MPC had a restriction, FX sales ban to BDCs. So how do you think that the Central Bank of Nigeria can really lift the naira? Is there a way, or the CBN is really out of options right now? Or is it that they've done their own part, and on the fiscal side, we need to see more because a country that produces more, the currency may be a bit stronger. China exports more than it imports, though we know that China manipulates its currency, though China says, no, we are not touching our currency. But we saw what happened when Trump was there as the president of the United States. So talk to me about the naira weakness, really. Is there a way out?
Well, there are temporary ways out, but those measures are largely temporary. One of which the central bank can actually deploy its war chest, which is the 4 billion we got from international capital markets, and the special increase in a special drawing right, and try to defend the naira. But that's also temporary because if you are defending a currency with borrowed funds, with one-off inflows, it's not sustainable because ultimately, if it's not a consistent flow, you will run out of that reserve, you run out of that resource that you're using to defend the currency. So the only way you can have a consistent appreciation of the local currency if our export revenue increases or our import expenditure decreases. The possibility of our export revenue increasing in the short term is quite weak because you are not going to become suddenly a major exporter of multiple products because you don't even have the manufacturing base that supports such level of export. You are not producing cost efficiently as to begin to compete globally. So that option is a medium to long-term approach, but there's also a short-term approach. The short-term approach will largely come from the fiscal authorities. There's a limit to what the central monetary authorities can do. The monetary policies intended to defend the naira must be complemented by fiscal policies of the government. One of the low-hanging fiscal policy which the federal government can deploy to strengthen the local currency, take out the subsidy on petroleum products. I know the Petroleum Industry Act has been passed into law, and the Minister of Petroleum and the Minister of Minister of Finance said that by end of June, the subsidy will be taken. Nancy, between you and I don't have absolute confidence that subsidy will be taken at the end of June because the end of June will be about the time the parties will be preparing for their primaries.
So they want to be politically correct. They won't want to be on the side of
a sudden jump.
Yes, go ahead.
I can't hear you, Nancy.
No, I was just saying that perhaps I concur with you because the politicians will not want to do anything that would jeopardize their chances of having good, in the minds of people.
That for a ruling party to take out subsidy on petroleum product and they award the price jump from maybe 165 naira to 300 naira or maybe 320 naira. So it's not realistic. If the government really wanted to, is bent on taking out the subsidy, they would have started the price modulation by now and gradually move up the price so that the system will adjust gradually. But you can't just wake up maybe on 1st of July and say the price of fuel has moved from 165 to 300 naira and expect people just pay. It won't work. So I don't think they intend to take out the subsidy. But if you take out the subsidy, back to what I was saying, if you take out the subsidy, the benefit that you're going to see a sharp drop in our the amount we are spending on fuel importation, which accounts for about 15% of our total imports. So if you eliminate just 5% of that, your import bill will decrease materially. Because one, I believe we are importing fuel that we're using to service the demands of neighboring African countries. But once we adjust the prices to be at par or comparable to what obtains in places like Cameroon, Niger Republic, Benin Republic, and other neighboring countries, you will realize that the motivation for people to smuggle fuel out of the country will no longer be there. And the demand that we are financing will decline. That will give the government the resources that will help us rebuild our reserve or reduce the demand we're having on our reserve. Secondly, the crude swap is that we are actually exporting crude for naira payments because all the crude swaps do not involve dollar inflows. So that portion of the earnings that we would have made in foreign currency, if we had exported the crude and earned income from it, we are not doing because we have adopted a subsidy scheme that will require us to do crude swaps so that people can take the products from here to go and refine elsewhere and bring them back. So these two factors can be addressed in a matter of days. If we do that, in the next 3 months, you're going to see a sharp decline in our demand for forex because our import bill will decline. We're going to see an increase in our foreign rating earning because the volume of crude we need to export, we can export, will also increase. from the NBS report, the last quarter of this, the third quarter of this year, we only exported 1.57 million barrels a day, and that includes condensate. So we are far share of your capacity to export because of the policy we adopted. So if we adjust those policies, which are going to come from the fiscal authority, then you're going to see the CBN capacity to even push for naira appreciation strengthened. But without those things, I think the monetary authorities have limited tools they've not deployed to further strengthen naira on a consistent basis, on a sustainable basis. Like I said, you can always deploy resources to defend the currency or increase its price or value on a short term, but it's not sustainable because it's not coming from a flow. Today, our balance of trade is still negative. Granted that the extent of that negative balance of trade has moderated, but it's still negative. So in effect, for every mode you export, what you earn from your export is less than what you spend to import goods on a monthly basis. So if you don't address those fundamental issues, then I don't know any other tool the monetary policy can deploy on a sustainable basis to strengthen the currency.
Mr. Chukwu, let's go to another issue, which is that of the National Development Plan. I guess you would have seen it, perhaps you would have read it. The Minister of Budget, National and Economic Planning announced it. Let's go back history a bit, because at least since I started this part of journalism, business journalism, I've been hearing about development plans. But if we take it to the first development plan in Nigeria, 62 to 68, then we have 70 to 74, the second one, then we had 75 to 80, we had 80 to 85, 85 to 90, 86, the structural adjustment program, definitely, where the IMF initiated some reforms that we really had to do, and we know that period, how it was then. We went back to, I think, 2000, we had NEPADS, then we had NEEDS, then the year 2010, it was as if 2010, that was during Abacha did 2010. Then I think, which one again followed it? Vision 2020, how can I forget? Yaradua, Vision 2020. It was as if 2020 was so far. 2020 was last year, nothing yet. Good luck, Jonathan, transformation agenda. ERGP, finished now. National Development Plan, 2021 to 2025. I needed to take our viewers through that economic history. What will be different from this? Or is it just throwing years and good words at us, of acronyms? And also, don't forget, the World Bank will release its second Nigeria Development Update tomorrow. What do you expect to see?
Starting from the National Economic Development Plan 2021 to 2025, you asked what is the difference, has anything changed? What I would say that is slightly different from what we've seen in the past, the earlier development plans, is that this one is supposed to be private sector driven. If you look at the projected 350 trillion naira in that plan, the government is supposed to fund about 550 trillion naira, while the private sector is supposed to fund about 300 trillion naira. So if that policy is to be implemented, it then means that the government will now further lay down a policy to say these are the sectors of the economy that both strong prospect for private sector investment. And then these are the level of investment capital we need to bring in. And these are the expectations or requirements of the private sector for them to come into those sectors. And these are the interlinkages in terms of policies of the government, in terms of legal framework, in terms of security we need to provide, in terms of quality of education. If you look at that plan, they identify a couple of things they need to address, including the issue of security, the issue of inclusive and quality education, that you need to attract private sector to come into the economy and focus and invest in that economy. So if all these linkages are established, then the National Economic Development Plan 2021 to 2025 would become a reality. But they always tell you that talk is easy, but the problem is how to do it. Or they say talk is cheap. It's execution of the problem. So we've had several plans, like you said, but we are short of execution. Many of us strongly criticized the Economic Recovery and Growth Plan because it looked like a wish list of what ought to be, but clearly there was no connection on how to get there. And clearly you can see that economic growth and economic recovery and growth plan achieved minimal results, if any result at all. But let's look at this one that is going to be focused on the private sector. Let's even look at some of the sectors, for instance. If you look at today's economy, I think the second largest contributor to the economy today is the telecommunications sector. It used to be traded as the second largest, but now the telecommunications sector has become the second largest contributor to the GDP after agriculture. How did it become that? It came about as a result of policy of government that allow private sector to take holistic investment drive or the business of that sector, unlike what the public sector used to have when we have NITEL as a sole licensee that could issue telecommunication services in the country. Then later we had private sector, but the market deregulation did not go through a proper structure. But when we did the NCC Act, that's Nigerian Communication Commission Act, and then allowed licensing of private sector driven GSM companies. We've seen the impact, we've seen the level of investment. That level of investment can be replicated in several other sectors of the economy. Call it the railway sector. I still recognize that the federal government is trying to build the rail lines. Instead of focusing on private sector to concessioning corridors to private sector to build, then concessioning those operators with their rolling stock, and then the government will just stay at the regulatory end of it. I still recognize that we're trying to build some of the highways, some of them are very commercially viable, that we don't have resources to build. We've been building Lagos-Ibadan road for more than 20 years. We've not completed it. A private sector operator could have built that road in 2-3 years, and then would have taxed it by now. If we did it on that build, operate, and transfer, we'll be talking of maybe 5 years for them to transfer it back to the government. I still organized that we're trying to build the second Niger bridge from budgetary allocation. Since 2015 to date, we have not been able to. I don't know what percentage they've done, but the private sector that initially was concessioned would have built that bridge now and run it for more than 5 years. So the key thing is this: once the government recognizes that it doesn't have the capacity to build the economy from budgetary allocation, given its weak revenue profile, then it now needs to identify those sectors. Not all sectors will be viable for the private sector. There are some social sectors the government will have to put their money and manage. But those that are those commercial sectors, let's give the private sector, let's create the enabling environment in terms of policy environment, in terms of legal environment, in terms of law enforcement, in terms of security. And then if we do those things, you're going to see private sector capital come into this country, because we had a huge market, but we're not tapping that market. That's the only way we can achieve this about 348, or to call it approximately 350 trillion naira that we want to achieve in terms of investment in the next 5 years.
Okay. Mr. Chukwu, I know we have a lot to discuss, really, because so many economic stories, but we just have less than 1 minute to go. And let me bring in the slant to it, because we also live in a global village. The global stories on this week: fresh lockdowns in Europe. How do you see that impacting oil price? Perhaps we would also have a new Fed chair if President Biden doesn't pick Jerome Powell. How do you see that playing out? I think there are two candidates that are being considered, Jerome Powell and Lyle Brennard. How do you see that playing out? Very quickly.
Well, I think my take is that it's likely they're going to go to Powell. That's my own thinking, given where it's coming from. But in terms of the global capital market you mentioned earlier, we've seen threats of a fourth wave of COVID. We've seen, particularly in the Western countries, where there are concerns that there may be some lockdown, and that had a direct impact on the capital market in the past few days. But the most important news we're going to get is who takes over the Federal Reserve Bank chairmanship in the next couple of hours.
Thank you, Mr. Chukwu, for being with me this morning. Let's continue this conversation on a later date. I wish you a fantastic week.
Thank you.
All right, that's the much you can take on today's edition of the program. I've been speaking with Johnson Chukwu, who is the Chief Executive Officer at Carry Asset Management. We've been looking at the front row economic issues. Thank you all for being a part of the show today.